Well, hi everyone. Welcome to our weekly market setups for August 19th, 2023. This is Leslie Juflis of Trading Live Online. And today we're going to start and look mostly at the indexes today. So we'll start with the S&P 500, and I'm starting with a weekly chart. I thought we could take a little bit of a broad view first and then work our way down in time frames. Well, first of all, I want to show you something. I want to take off this retracement right here. We'll put it back on in just a sec. But back here, there's the inverse head and shoulder pattern, which is a bullish pattern. And that's the left shoulder, the head, and the right shoulder. And you can see if we look back here on this weekly chart, it was several weeks of the market going back and forth, back and forth, back and forth. And this also coincided with that 4,200 level on the S&P that the market had tried many times to get through and just had to spend more time working at it. So it finally broke through the 4,200 back in May, and then this uptrend had started. So now when we're looking at this chart, things I think look actually pretty quiet. So when you go out to longer time frames, it quiets the noise. When you're on short time frames, you see all of the swings up and down, and sometimes things look more dramatic. So with this chart, we can map out where some of the very important support levels are. We know 4,200, so let's kind of just draw a line right across about that level. I'm actually going to change this. I'm going to change the color so I can remember mostly why I had this here. There we go. So we know 4,200 right here, and then below here, that's around 4,050, and that was the lows of these tests. So I think that's an area worth watching as well. So let's just sort of frame in a bit of a range here. Now, if we put on a fib retracement, I'll use this low to high. We can see that both of these levels are coinciding with Fibonacci retracement levels. So the 0.382 is coming in right around that 4,200 level, and this lower level here is coming in right about the 0.50 retracement. So these are definitely areas that we want to watch, and these may offer, we don't know yet, we have to see how the market looks if it gets down closer to that, but this may offer very good buying opportunities. So when you're watching and monitoring your support or your resistance levels, we never know what price is going to do, but we can monitor how price reacts to those levels. So in other words, if price starts to get some slowing down around these levels and down on smaller time frames, most likely we'll be seeing some type of buy patterns forming. So want to be looking for that. And that would be in comparison to seeing very long bars coming down, and we're not seeing any support at that level. That gives us a different set of information. So we want to be able to monitor how price comes down. So now that we have this picture, also before I forget and we get off this chart, the inverse head and shoulder, this is what the projected target is of this pattern. Now, just because the market's coming down doesn't mean that this is invalid any longer. Where it would be invalid is if price trades below this low. So we may just see some testing down if the market turns back up and it's able to get above these highs. Of course, these highs back here are important. And the measured move target is just a little bit above that. Now let's take a look at the SPY. This is the SPY. I'm on a monthly chart with the SPY. So here is where the market also broke out to the upside we just looked at the futures on the S&P 500. Now we're looking at the ETF SPY. So that 4,200 level, the breakout was right, in this area, and the market moved up from there. So we're on a monthly chart. So we have fewer bars on this, and this we haven't closed in August yet, so we don't know exactly how this bar is going to look, if we see more downside with it or we see some sort of reaction back up. But regardless, it is a bearish bar candle right now. But one thing candles don't tell us is it can't give us any type of targets. It's just telling us that, the market is bearish. But keep in mind, this is not closed. So using the retracement, if we put this on the SPY from the low to the high here, then we see that 382 is also on the SPY coming in right around where that breakout level is. So I do want to be, if the market moves down here, I do want to be looking for some type of support to come in again, or if the market just blast right through it, then that's giving us some other information. But notice that we can also draw this trend line from the 2020 lows and up and through, and depending on how the price comes down. So if it comes here and it comes up and it goes around, it's going to be closer to where the 382 meets this trend line. If it comes down more sharply, then it may be coming closer to the 0.50. So, but we do want to keep an eye on this trend line because this may be offering us a good opportunity for support. All right, now let's take a look at a daily chart of the S&P 500. This is the futures again. So here I've got in the yellow circle, there's gap area right here. And on the futures, that's around the level, this upper part right here. The low of this bar is 43.27 and a half. And then here, the high of this bar is 43.0250. So we've had, quite a slide to the downside there. I would be expecting some short-term support to be coming in on any further downside right around this gap area. Whether it fills the gap on the first time down or not, we just have to watch. But in Japanese candlestick theory, this entire space in between, which is known as the window, is considered either support or resistance. So this would be considered support anywhere. So anywhere from the low here to the high here would be considered support in the window. Okay, so back here we have this high, and look at where this high is. This high is coming in right to about the low point of the gap. And then we also can see here there was some clustering in this area where the buying was strong enough to create the gap to the upside. So I would expect some short-term support coming in with any further down early next week, and then be watching for retracements back up, which I think are going to be short sell opportunities. Now, if the market completely goes through this gap and keeps going, that's going to be bearish. And then the next area would be around this 4,200 level for support. So be watching this gap area early in the week, see if the market can come down here and find support and do a bounce off of there. So let's take a look at the Dow Jones Industrial now. So I am on a daily chart. So there had been a lot of chop back and forth with the Dow for, quite a long time. And it got above this resistance level, but ran into more resistance. You can see all the way back into these levels from 2021, 2022. So right here where this dashed line is, you can see how that is coming across to what was previous resistance that the market was able to get above. and now it's back here testing that level. So let's look at a Fibonacci retracement from the lows here to the high, the recent high, and see, oops, let's see if I can get that hooked on there. There you go. Come on, get up there. Let me try again. There we go. That's a little bit better. So the 382 is down all the way down in this level here. So we do want to be aware of that. Even if the market has more of a decline back into here, we haven't even reached a Fibonacci retracement level yet from this move that started to the downside. So again, like I said, with the S&P 500, possibly early in this next week, we see a bounce to the upside. The Dow looks like it's finding a little bit of support right around this level. If it comes through here, then right around the little gap right here and these lows here might be some support to start a reaction back to the upside. Again, I think that it's going to just be offering some short-term shorting opportunities on all of the indexes with any rallies to the upside. If we take a look at the YM, these are the mini futures for the Dow Jones, then we can also find a point here using this low from March of this year up to this recent high and just coming down into a 382 retracement, which, where I just showed you on the Dow Jones Industrial, the INDU symbol, uh, where the little gap was there, and then the lows here. So you can see that there could be potential short-term support at this level. And again, just looking for a retracement back to the upside. If the Dow comes, before that happens, a little bit lower, then we want to be looking, see where the gap level is, these lows, then that'll be right around this 0.50 retracement. Now we're looking at a daily chart of the NASDAQ futures, and the NASDAQ has been, fairly weak. Of course, it was the leader on the way up, and some of these really big names are turning to the downside, so it's not a surprise to see this. But notice here there was an ABCD buy pattern. Notice how it just got a very small, that's a very weak reaction for a market that's come up to these highs. There was the butterfly sell pattern that preceded it. So, this is telling us the market reversed from there. I'm going to just take this off for now, so we're not cluttering the chart. But now we see this leg to the downside. Here's a bit of a gap area right here in that yellow circle. So again, in keeping with the Dow and the S&P, early next week, potentially having a kind of relief rally to the upside, a little bit more down. It looks like right here, the lows of Friday, I'll just clone that and move it over. The lows of Friday came down to the beginning of this gap. So a little bit lower, filling the gap. It's around the 14,512 level. And these lows here I would be using as the short-term support. Again, if it just barrels through here, then we're going to be looking for that 0.382 retracement. Again, looking for a rally back up as a shorting opportunity. Now this is the transportation index on a daily chart. So I just wanted to point out a couple of things. You can go in and look at some transportation related stocks. But again, I think a shorting opportunity on the way, any rally back to the upside. So if we're going back to the high that was made in 2021, see here's the retracement down longer term from March 2020 lows to this high. That's what this retracement ladder is here, here, and here. So it came almost to the 0.50 and then rallied with a lot of choppy swings back and forth. And then back here in June of this year, is when the transportation index really took off to the upside, made it to the 886. Now, they had some closes above the 886, and generally, as a rule of thumb, nothing in technical analysis is ever written in stone. Rules of thumb, so that means that we don't have 100% um, of the same outcome. So generally, when the price gets above the 886 and starts closing above it, you see price work its way to the 1.0 and oftentimes up to the 127. So this high right here is going to be an important high to keep an eye on. But again, I think for now, uh, any short-term rally back up in some of these transportation stocks that have similar looking charts as this is going to be a shorting opportunity. Notice the gap right here. Notice how price just fell right through that gap, and it also fell right through this trend line. So that is something to be keeping an eye on. So we had a trend line coming down here. See a strong trend line there. And then a second trend line fanned out across this high from 2022 and projected forward in time. So, maybe this only gets a little bit of a rally now, testing the underneath side of that trend line. And also, if you look at my horizontal cursor here, just possibly back to this gap area, which now I would consider that to be an area of resistance. This is the Russell, the daily chart of the Russell 2000, which I talked about recently, that there's a seasonal bullish bias. It's not right now, it's coming up in like October, November, December. So have some patience. But it has a seasonal bias to it. And we've got this really nice range right now mapped out. So I thought I would just take a look at it. So here's the very upper resistance of it right here. We can see these 2 points here, and it's back down now just about to the middle of the range, which I'm actually going to mark right now. I'm just going to kind of eyeball it. Looks like about the middle. Here, I'm going to make that a dash line as well. There we go. And you can see, actually, I think that should be a little bit lower. I think it's right about where this is. So we want to be keeping an eye on this range. Remember, we are in a seasonal period for a downward market in the indexes. So how much down we get, it remains to be seen. But as long as we keep doing our analysis and identifying support resistance levels, and we monitor how price is reacting to those support and resistance levels, that's what's going to be giving us the most information. We will be able to, if later in the year the Russell index starts to come up towards the tops of this range and break it, that's going to be a bullish signal for this index. So again, you might want to be going in and just making a watch list of stocks in the Russell 2000. Those are the small cap stocks. And I'd be looking for the ones that look strong right now, ones that are in basing patterns, and just keep an eye on those ones and keep checking back on how they're progressing with this down correction with the market right now. So the last thing I'm going to update is gold, because last week off of this ABCD buy pattern, if you remember, I said, this is not a good location to buy it because it's already bounced up, gotten a retracement from this pattern, but a pullback might be a buying opportunity. However, look at what the pullback has done. So we're going to have to wait on this for more information. This, again, I think is a support level to be watching. Price is almost right there. So we'll keep an eye on this and look for any other signs that gold might be ready to rally. Right now it's showing us that it's not ready. It's not baked yet. So here the RSI that had been climbing to the upside with this, which had looked bullish, has now changed and broken that upward sloping trend line on the RSI. So again, we'll just put this one on hold for now and keep monitoring it. Okay, this is the last chart that I'm going to cover today, and this is the SOX index. And the semiconductors had been very, very strong on this run up. Names like NVIDIA come to mind for one. Advanced Micro was pretty strong. That's doing a correction as well. But I think the same thing with the semiconductors. See some support come in early this week. You can see right here on Friday, the SOX index turned, slightly to the upside, and look where it is. It's right into this gap area. It's at the beginning of this gap area. So again, if it did a little bit more downside early in the week, down and close this gap here, you want to see it close and bounce from there. You don't want to see it close and keep going. The next levels would be down, around here below that gap area. But again, same thing with those stocks. Perhaps a rally to the upside with them, and then potentially shorting opportunity on those. Okay, that's it for this week's weekly market setups. I hope everybody has a great weekend. I'll talk to you next week.